Today we're looking at new regulations. It's going to be full of very interesting presentations. It's action-packed. It's going to be a great work stream. So I'm going to kick off with the first presenter. That's Scott Mcinnis from Bird & Bird. Thank you.
Thank you very much. Good morning, everybody. So I've been asked in about 15 minutes, I think, or so, to talk to you about PSD2, in particular, the open banking provisions of PSD2, or how the TPPs get access to the payment accounts. Do you have the clicker, or is that the clicker? Oh yeah, that looks like looks like a bomb actually, but cool. So I'm obviously a lawyer, but I'll try not to be too legalistic because not a great start to the day if I bore you with a lot of legal mumbo jumbo. But I'll try to keep it very short to say, look, there are a lot of legal questions that are still open in relation to the open banking provisions of PSD2. A few are now clear or clarified, sort of, but there are still a few that are open, and the few questions that are open, frankly, may have a big impact as to whether or not PSD2 is going to be a success or not. Of course, then you can debate, what is a success and what is not a success. But frankly, if the answer to some of these, in particular, two legal questions is limitative, then you may wonder what, this whole PSD2 thing, why the hell do we bother anyway? It's meaningless. And some people are already saying, yes, that's probably going to be the outcome of PSD2, is going to be meaningless, which means, frankly, let's get a draft of PSD2 out there as soon as, of PSD3, sorry, out there as soon as possible. So we'll see how we get on. So legal issues, that's the stuff that is now clear, okay? So it's, again, a bit of legal mumbo jumbo, but I'll try to make it clear. The first question that we had on PSD2 was, I haven't got a screen here, cool, is, who collects the consent? So, I'm the consumer, I want to use a TPP, and that TPP will have access to my bank accounts, my payment accounts. Who has to check the consent? Initially, the bank said, well, surely we check the consent before we give anybody access to, Scott's bank accounts. We check if Scott is happy with that. Well, wrong answer, okay? It's the TPP who checks the consent, and we now have it in writing in that beautiful thing called the EBA opinion. So the EBA is the European Banking Authority. They published an opinion in June of this year where they said, no. They confirmed what the Commission have said before, by the way, for a good year and a half now, which is, no, the TPP is in charge of the consent. So Scott gives his explicit consent to the TPP, and the TPP then goes to the bank and say, look, bank, I've got Scott's consent. You open up the gates, you give me access, okay? And the bank should not be calling me to say, are you sure you want to give these guys access? Are you sure you gave your consent to this? Or the bank can't say tell the TPP, could you please show me that consent, give me a copy of it or something? That would be illegal, okay? If the TPP says he's got consent, as a bank, you open up the infrastructure, you give access. The reason being TPPs are now regulated, there's no reason to assume that they're lying, essentially, okay? So that's the first thing that has been clarified, really helpful. The second one that has raised a lot of discussions, and still does actually, is how am I going to authenticate when I'm using that TPP? And the banks typically want a so-called redirection flow for the strong customer authentication, or the SCA. In other words, I log in with my TPP. It can be an AISP, so a data aggregator, or it can be a PISP, somebody who will access my accounts and push payments from those accounts. But at some point I will have to authenticate, that's a legal requirement, and there's something else that we'll talk about in PSD2 called the strong customer authentication, or the SCA requirements. And typically banks want you to be redirected to the banking environment, authenticate with your bank, password, PIN, fingerprint, selfie, whatever, and then you can go back wherever you were before, the TPP environment to complete your journey, or the merchant's website, if it's a PISP service, to continue your journey. And in the opinion, well actually in the Regulatory Technical Standards, the RTS, another very interesting document that was published, there was something in there where banks said, oh, they've killed redirection. We are not allowed to impose a redirect on the TPPs. Because the wording was a bit wishy-washy. It said, look, banks, you should not be creating obstacles for TPPs. And if you impose a redirect, that may be considered to be an obstacle. So the killer word here is may. May typically doesn't mean shall. And therefore, very early on, we say, well, they say it may be an obstacle, but therefore it may not be an obstacle. And that's the clear opinion that we now have from the EBA, which is, well, as a bank, imposing a redirection or redirect for the purpose of strong customer authentication is not illegal per se. It just depends what that journey looks like. Okay, so you start looking at things like counting the number of screens, looking at the information that you display, on the web browser or in the app, in terms of how you authenticate. Comparing that journey with my journey when I work with my bank directly, in my mobile banking app. How many screens does it take before I can actually push that payment? You look at all that and you come to a conclusion whether that redirection journey looks consumer friendly and therefore does not create an obstacle, or is not consumer friendly, therefore creates obstacle and therefore is an illegal redirection, if you like. So it makes it tricky, but at least it's not black or white. It's some redirections will be legal, some redirections will potentially be illegal. Okay. So at least we're clear on the law. Now in practice we still don't know what it means, but at least we know where the law is. Okay. What data can a TPP get access to? In particular, an AISP, so somebody who's aggregating my accounts. What data can they get access to? Because actually, when I work in my bank, I may actually have access to different sets of data. If I log into my PC banking platform, I may have access to a certain amount of data, and in my mobile banking app, I may actually less data available than in my PC banking. So the question was, what is an AISP, an account aggregator, entitled to? Is it entitled to dataset A, the PC banking data, or dataset B, the mobile banking data? And the answer, he gets the maximum amount of data. Okay, so in my example, he gets access to A, right? Because there's more in the PC banking than there is in the mobile banking app, so he gets access to that. We're already seeing a few interesting scenarios where actually it's not clear which one is more than the other, because sometimes it's just different. You get different data sets, and it's difficult to say, well, this one is more than the other one. This one has more in quantity, but this one has more in quality. So you can get into all sorts of interesting legal discussions, but at least the principle is, they get the maximum amount. Okay? So far, so good. The law is clear, as you can see now, on those things, so sort of. There have been a lot of questions on the interplay between PSD2 and GDPR, okay? Obviously, I mean, in an ideal world, this should have been nicely aligned because they were more or less drafted at the same time. In reality, they aren't, and there are contradictions. The number one contradiction I can think of, to make it simple, is in PSD2, there's something called explicit consent. In GDPR, there is something called explicit consent, but they don't mean the same, okay? Although they were drafted at the same time, just to give you an example. So the question there that I wanted to flag is, actually there is an article in PSD2 that deals with data protection. And so some people were saying, actually some national regulators early on were saying, well then surely if you're a payment service provider, if you're a card issuer, if you're a merchant acquirer, if you're a bank frankly, then if you just comply with that article of PSD2 that deals with data protection, you essentially forget GDPR. Because that article of PSD2 is lex specialis versus GDPR. Now we've got the other answer from the regulator, which is no, you comply with both. You comply with that article on data protection of PSD2, and you comply with the GDPR. Okay, that's another thing that has been clarified. What about silent party data? So here, by silent party, what I mean is, if I give my consent to an AISP to access my payment accounts and to pull that data, in there will be personal data that obviously belongs to me, my name, my address, my balance, my transactions, but there will be personal data that belongs to other parties. If I pushed a payment to my sister yesterday, my AISP will probably get my sister's name, IBAN, potentially her address, and a bunch of other personal data that are related to my sister. And so some banks have got in touch with us saying, well, then surely if we comply with PSD2 and we give that data to the TPP, we are breaching GDPR. We can't comply with both at the same time. The answer is, well, you can comply with both at the same time, because under GDPR, you don't always need somebody's consent to process, in that particular case, to give their data. There are other legal bases. And here the legal basis is, the reason why you give Scott's sister's data to the AISP is not because she gave you consent, she didn't, but because you have a legal obligation to do so. You have a legal obligation to process Scott's sister's data, and therefore you're not breaching GDPR by complying with your PSD2 obligations, okay? But that's a summary in 20 seconds. It took 6 months for lawyers and the Commission and FISMA and the EBA to actually figure this thing out, okay? So this is the short version because I've got 15 minutes, okay? And then my AISP has my data and my sister's data, but actually is he allowed to use my sister's data? Because my AISP will not have my sister's consent. And the answer is yes, my AISP can process my sister's data because he's got another legal basis. And this time it's not a legal obligation, it's something called he's got legitimate interests. So based on legitimate interest, we're now told by the European Data Protection Agency, if you like, that it's okay for my AISP to process my sister's data because he's got legitimate interest to do so. Okay, again, that took 6 months. I'll give it to you in 30 seconds. Then there's a burning issue around whitelists. So by whitelist, I mean the law calls it a list of trusted beneficiary. Okay, so I can basically whitelist or trust a bunch of people, and when I pay those people, I don't have to do a strong customer authentication. Okay, so I can whitelist my sister, and when I make a payment to her, I don't have to do an SCA. Or my bank has an option not to ask me to do an SCA. Or I can whitelist, my favorite online merchants, say Zalando, and I whitelist Zalando, and I never have to do SCA again when I shop on Zalando. Okay. The question that has come up is, a TPP, is he allowed to write on the whitelist? Is he allowed to add people on the whitelist, if I'm happy for that TPP to do so? The answer is no, he cannot. It's my bank who maintains the whitelist. A TPP is not allowed to write on that whitelist. So that is clear. However, what is not clear is, can they read the whitelist? And now we're moving to the things that are not clear. My TPP is allowed to have access to read the whitelist. Well, again, here we have the famous may that we already talked about before. Another may, but this is another may. Where we are told, did I quote the text? Yeah, the PASP may have access to the list, blah, 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 blah. So we don't know what may means. Therefore, as far as I can see, there is still no clear legal obligation or no clear legal right for a TPP to have access to a whitelist. So we will see how that's going to play out. But we still don't have a clear answer. And here you have, again, a clash between PSD2 and GDPR. I won't bore you too much. But essentially, my bank, as I mentioned before, needs a legal basis to give data to my TPP, and in particular to give my whitelist to a TPP. And if there's no clear legal obligation for my bank to give it to a TPP, then they can't rely on the consent of, I'm doing it because I've got a legal obligation to do so. And there's probably not a legitimate interest for the TPP to have it anyway. Therefore, you have to end up with things like consent. My bank will need my consent before they share my whitelist with a TPP. Potentially, if there are some dodgy things on the whitelist, if I'm, let's say, a member of a French racist party and I pay contributions to that party every month, that is called sensitive personal data under GDPR, and my bank should not be giving that to a TPP without my explicit consent. So it raises interesting questions on the interplay between PSD2 and GDPR there too. Now I come to what I think are the two most burning questions that are still not answered, clearly, under PSD2, and that I think will be the questions where, if we get the answer right, some may say, although again, depend right, but PSD2 will be, worth it, a success, you may say. And if we get the answer wrong, then some people will say, okay, well, this whole PSD2 thing, it's a joke, right? It means nothing in practice. It's not going to be successful. Bring on PSD3 as soon as you can, okay? The first question is, TPPs have access to payment accounts. And the question is, well, what is a payment account? And now we've got the legal answer. The Court of Justice in Luxembourg, a month and a half ago maybe now, said, well, a payment account, well, actually, they've conferred something that we should have known, and that, frankly, our European legislators should have known, and the EBA should have known, but apparently they didn't know that, okay? So I think it was a bit of a surprise to a lot of people. A TPP is entitled to access to payment accounts, and the court in Luxembourg says a payment account is an account from which I can push a payment to a third party, or I can receive payments from a third party. Okay, so the conclusion from that is that most savings accounts in Europe, les comptes d'épargne, most savings accounts are not payment accounts. Because in most countries in Europe, as far as I know, you cannot push money to a third party and you cannot receive funds from a third party. If you've got money on a savings account and you want to pay somebody, you transfer it first to your current account and then you push the funds from your current account to the third party. So in other words, we're really saying that PSD2 is about access to current accounts. That's what it is. In other words, who is going to use an AISP under PSD2 if that AISP can only aggregate your current accounts? You've got current accounts at free banks, you've got savings accounts at free banks, and your AISP will come to you and say, hey, I've got a fantastic service. I can aggregate your current accounts for you. Okay, great, but what about where my money is, which is on my savings accounts? Oh, sorry, I've got no visibility on those. I can't see those. Okay, well, that's a crappy service. Nobody's going to pay for that, right? Even if it were free, frankly, I wouldn't use it, right? So the legal answer is PSD2 is about TPPs having access to current accounts, full stop. In other words, AISPs are dead, if that's the legal answer. So the question is there a way for AISPs to nonetheless have access to the other accounts, in particular the savings accounts? And that's when they start to have a service that is potentially attractive to consumers. If they can have access to your savings accounts, maybe to your mortgage account, maybe your brokerage account, maybe your insurance accounts, your mortgage, all sorts of investments, all sorts of things. But at least savings, right? You can't do account aggregation if you don't have at least current and savings accounts. So the answer is, well, access to savings accounts is not regulated by PSD2. So maybe you need PSD3 very quickly to fix that, or you need a national piece of legislation saying, well, actually in my country, let's say in France, because there's a draft in the French Parliament, in France, we give access to TPPs not only to PSD2 payment accounts, but also to savings accounts, because otherwise it doesn't make any sense. But somebody will maybe have to fix that, or we're going to live in a world where TPPs will use the PSD2 regime to access current accounts with APIs, dedicated interface, fallbacks, and all the rest of it. Won't bore you with it. And then access to savings accounts, they will screen scrape, which is the technology that most TPPs were using to run their business until now. They will screen scrape the accounts, or they will reverse engineer the accounts in order to have access to the savings accounts. And we will live in a world where they will have, again, that secured, regulated access to current accounts. And it will be the wild, wild west in terms of access to the savings accounts with screen scraping and all the security issues that this raises. So, so that's the first tricky legal question, I think. The second one is, once my AISP has collected my data, or once my TPP, more generally, has collected my data, what can he actually do with that data? Can he just provide that AIS or that PI service to me, and that's where it stops? Or can he potentially do more with that data if I'm happy for him to do more with that data? GDPR experts will tell you, well, there's no problem. If your TPP has your consent to do more with the data, for example, to provide, the classic example is a mortgage comparison service. They check how much you pay on your existing mortgage, they can offer you another one, and it's, and they take a fee on the transfer, essentially. Then if under GDPR, most GDPR experts will say, there's no problem. As long as you're happy with that, you give your consent, no problem. The problem is PSD2, I think, in this case, because the wording of PSD2 is really wishy-washy. And PSD2 is not a text that everybody looks at. Actually, PSD2 is implemented in the national laws of the different countries, and different countries have implemented the text differently on this issue. And most countries have gotten for an implementation that says, if you're an AISP or if you're a TPP, you have access to the data to provide your TPP service, full stop. In other words, you can't do anything else with it, and you're stuck. So that's the second, I think, burning legal question to which we don't have an answer from the Commission, from the EBA, etc., which is, if we really created PSD2 to only have access to the data to provide a payments initiation service, boom, finished, or an account aggregation service, and it stops here, that, again, I don't think that's going to make the TPPs really fly, and a lot of consumers take up, and a lot of competition, innovation, and all that good stuff that was meant to be, the purpose of PSD2. So I think that's the second key legal question to which, again, we don't have an answer, and that will determine whether PSD2 is a success, if you look at the objectives of PSD2 at least, or not a success, and you could call it a failure. And in that case, some people would say, okay, well, let's bring on PSD3 again very quickly. Let's have a draft very quickly, because that doesn't look very good. I'm not sure I'm doing on timing, but I could stop here, because I think that those are the most two. Well, the consent is now defined in GDPR, so it needs to have a series of features. It's got to be clear. You need to know what you're doing. It has to be active. It can't be passive. It can't be hidden on page 17 of the terms and conditions. In other words, the most clear definition I can think of consent is you have to understand what you're actually doing. Okay? Is it painful as a consumer to understand what you're actually doing? Yes, it is. And actually, there are two things that come together which are really annoying as a consumer, which is, one, the consent for them to process your data, and then all the so-called cookie banners, where you agree that, yes, I'm happy for you to use my, to to use cookies to basically track what I'm doing, okay? That second one is being revised and potentially about to get even worse. That is regulated by a so-called e-privacy directive today. It's going to become an e-privacy regulation next year. And it's probably going to get even worse in terms of having to click on stuff to agree for. So there too you could argue, is it a success? Okay, because, well, yeah, you could say consumers are now more informed than they were before. Where are they really? I mean, I think it's absolutely clear that consumers are more annoyed than they were before. I think that one is clear. Or they're more informed than they were before. Well, maybe some people are now a bit more careful, saying, well, if there are a lot of things that are popping up on the screen, surely it means that there's stuff going on. But do consumers really care? I'm not sure that they really care. So that is a very big debate as to whether GDPR is actually a good thing or a bad thing, the way it's currently being implemented. I think it's probably too early to judge. Because we've only had GDPR for less than 6 months. You know, it went live in May. So the short answer is I don't know how we judge GDPR now. But at some point, GDPR is going to be assessed. You know, by 2021, I think there has to be a report on the consequences of GDPR and what's been the effect for consumers more aware, consumers more informed, consumers more careful. In the meantime, obviously, you can expect the regulators to enforce GDPR. Actually, that started. A few large companies already facing investigations by the data protection authority saying, we'd like to look at the data you're processing because we believe there's a potential breach of GDPR here.
Seems to be missing, though, is control versus I'm informed, but am I in control? Because that was the whole point of it. Okay.
Yes, well, most of the time the control is to say no, right? But then you don't get access to the service. Okay, so you're in control in the sense that now you know what they want to do, and now that you know what they're going to do, you can decide, am I going to continue using, I don't know, Waze, or am I going to stop using Waze because I'm too concerned that my data is going to Google, who's the owner of Waze, and they're going to do a bunch of things with it, which were written on page 16 of the terms and conditions. So are you in control? It depends how you define control. Certainly people should be more alert as to what is happening with their data now. But if the answer is you stop using the service and the service is so valuable that in fact you really want to continue using the service, then maybe we haven't fixed it yet.
Which is exactly the question, what is the value of the service?
True. Right. Well, if a lot of people are using it, there's got to be value somehow, somewhere. Now, if you know what you're giving in exchange for the service, then maybe at some point people say, well, actually, I'm not sure that it's worth it. Which is, and I'll stop in a minute, Martin, but which is raising interesting questions. There's a competition law case now live in Germany against Facebook. And instead of using data protection rules and say, well, you're breaching data protection, you're taking too much data, you're not informing the consumer clearly, whatever. No, the case is you're extracting excessive pricing from consumers. You're a company in a dominant position, you know, in competition law term, you have a dominant position. People are more or less forced to trade with you or forced to use you. And you're exploiting that. And I think Facebook will say, well, how am I charging excessive pricing when I'm charging the consumer zero? I think the competition law case, although we don't yet have a lot of details, but it's no, but you're charging a fee. The fee that you're charging is the fact that you're taking data. That data has a value, so you are charging the consumer, but not in hard cash, hard currency. You're charging them with your data, and you're taking too much, and that is excessive pricing, which is interesting, to say the least.
Awesome. Thank you very much, Scott, for that very interesting presentation. We'll move on now to really interesting presentations on security, topic of security, strong customer authentication. First of all, Ella Martin from Gemalto. Thank you. You take that.
Thank you, Martin. So I'm going to talk about a strong customer and the customer journey. And actually, Scott reminded us that PSD2 is about introducing innovation and competition in the market. But actually, innovation will succeed if the customer journey is satisfactory. It's a key element of the success of PSD2. And in particular, the authentication part is going to play a major role in the customer journey. And this is what we're going to be talking about. So I will cover the ways authentication are going to be implemented at the beginning, and we'll see the benefits of those approaches and some of the inconveniences, actually, of those approaches. And then we'll discuss the debate that was already touched upon a bit, and what is in the plans for new ways of managing the customer journey. So this is what's going to happen at the beginning. So we already, Scott mentioned the redirection model and some of the debates around that. And so the redirection model, in essence, as it's defined, is the customer journey starts on the TPP interface, and it is web-based mostly. And at some point in time, I have to authenticate, and so I'm going to be redirected to the bank's user interface for that purpose. And then I'll be redirected to the TPP interface to complete the journey. Okay, that is, in essence, redirection. And so it can happen on a PC in a web interface. It's being defined now as an app-to-app user journey if I'm starting on the mobile phone. And so I'm on my TPP app. At the point of time where I authenticate, I switch to the bank's app for authentication purposes before being switched back to the TPP interface. So that's redirection. The other model, which will most certainly be implemented very quickly in 2020, I guess, is called the decoupled model. So decouple, in essence, is an out-of-band model. So I start my user journey on the PC, for example. When I get to the point of authentication, a push notification will be sent to my mobile phone. So these are typical examples. It doesn't have to be that way. But decoupled means authentication is on another device. Okay? And so on that other device, typically a smartphone, I will authenticate using my bank's application. So it's still authentication in the bank's interface. Okay? And if that's successful, the TPP is notified and I proceed with the customer journey on the primary interface. So decoupled is basically two devices, one on which I transact and another device on which I authenticate. This already exists to some extent if you're paying by card with using 3D Secure. It's a good example of a decoupled approach because you're on your PC and you're buying stuff and you're going to authenticate using your mobile phone. So there are advantages to this approach. First, I think that is the most important one. This approach allows the bank to use what is going to put in place anyway to authenticate their users. So you have a mobile banking app, or you have a means to authenticate to access your accounts because you want to consult your accounts and do something. And the redirection approach allows banks to continue using exactly that. It also scales in the sense that you're not dependent on any other party as a bank to put in place these mechanisms. You control your authentication method. You're not dependent on APIs. I'll come back to that. You're not dependent on TPPs. You do your own stuff. And so it scales very quickly. The TPP doesn't have to do anything to authenticate. It's entirely upon the bank. It's in line with current practices. What does that mean? It means that today, when you authenticate, with a relying party, service provider, you're going to use the interface offered by this service provider. That's how it happens today. Right? It's simple. You use the interface of the party with whom you're authenticating. And so it reuses industry practices. I stress this point because at the end of my presentation, I'll illustrate two other ways of authenticating which are more disruptive, okay, that don't rely on industry practices. I mentioned it doesn't have an impact on open APIs. Indeed, you're switched, as you saw, you're switched to the bank's interface, and so you authenticate directly with the banks. You do not go through the open APIs, and so from that perspective, it's simple to authenticate that way. And finally, and this is also important, because studies show that banks are trusted by consumers, and that consumers will actually prefer, in some instances, to authenticate using the party that they trust. Right? And again, you should put that into perspective with what I'm going to present afterwards, the other models. Okay? But the fact that you are using a trusted interface, that of the bank, provides comfort and trust to the consumers, which should not be neglected. So, as you're probably familiar with, there are a number of open API initiatives in Europe with the Berlin Group, for multiple European countries, with open banking in the UK, STET in France, the Polish APIs, and so on. So all these open API initiatives are based on these redirection models or decoupled models. Now, so we've seen the benefits, but there are potential problems. And here we come back to the user journey precisely. This is one problem that could happen if things are poorly implemented. And this is an account aggregation use case. So if I have accounts in 3 different banks, and actually the 3 different banks have decided to use 3 totally different strong customer authentication methods, you can end up with this customer journey. In other words, every time I need to, well, not every time, every 90 days to be precise. So from time to time, I'm going to have to take my 3 different devices and do something different with each of these devices in order to access my accounts. Look, that could be viewed as a problem by TPPs. And if it's poorly implemented, it could be viewed as an obstacle. So could be. We're all in the may and could be and possibly, and but it could be. Okay, so it's going to be very dependent on how fast and user convenient these methods are. But the difficulty you see introduced by PSD2 is you have to have a device. You have to have a device with PSD2. And the device introduces these complexities. So this would happen every 90 days, so maybe it's bearable. But this could happen every time you pay if you're not benefiting from an exemption. And that could be more problematic because in e-commerce, every click, every additional click is a chance to abandon, okay, as merchants very well know. And so here we really get into the good or poor implementation on the ASP side. If the bank tells you to log in and then select an account and then provide consent and then use your mobile phone to authenticate or God knows what, that's going to be a problem when you're used to one-click shopping. And so this should really be considered, because payment initiation is something that's going to happen more frequently than authenticating to access your accounts for account aggregation purposes. That's every 90 days. This could happen every day, right? And so banks need to look at how they implement authentication on their interface very closely, because here again we could get into this obstacle stuff. Biometry is definitely going to help, especially using the decoupled model. So again, using the decoupled model, you can use your smartphone. Your smartphone typically supports some means of biometric identification. And this can simplify the user journey to a great extent. So I've put here a comparison of what can happen. You could have a one-step authentication, not meaning that's the only thing you're going to do on your mobile phone, because maybe you're going to choose your payment instrument on your phone or provide consent. But from an authentication perspective, the mobile phone allows to use a one-step authentication. Whereas OTPs, so there are a lot of banks are going to continue to use OTPs at the very beginning because that's what they have today. But OTPs will introduce a 3-step authentication because you have to provide 2 factors of authentication with PSD2, not just one. So the OTP alone is not compliant. Right? So you have to introduce a second authentication factor. For example, a password. And so a user journey will be a minimum of 3 steps using OTPs. You enter your password, then you use a device to obtain an OTP or generate an OTP, and then you enter this OTP on the bank's interface. And that's more complicated. So biometry is definitely a help. Well, there are even mandates for issuers to implement biometry by April of next year in Europe. And so we should be seeing these means of authentication using biometry fairly quickly. This is just one point because biometry alone is not enough. Okay? Biometry is just, again, one factor of authentication. You're going to put your fingerprint or take a selfie. That's one factor. but you still have to prove possession of the device. Okay, and the possession of the device is generally going to use cryptography one way or another. And so here, just illustrating two initiatives, one with EMVCo and CDCVM, if you're familiar with that, or the work that FIDO is doing, which is exactly this. So it uses cryptography to prove the possession of the device, but also, importantly, to convey to the server that the biometric verification was done properly. Because if it's only local, the server doesn't know, right? And so you have to prove to the server that the biometric verification succeeded. Okay, and here you can use, again, cryptography for that purpose. So again, there are two standards that support this functionality, EMV and FIDO. This is another way of helping the user journey, which is using ID federation. So very quickly, ID federation is banks federate around the services of an identity provider, IDP, okay? And this IDP is tasked with authentication, and then it provides access tokens to the bank. Okay, so I'm not going to go into the details, but with ID federation, the customer journey can be simplified, at least for account aggregation purposes, because you'd be redirected only once. And then you access to all your bank accounts through the services offered by the IDP. Won't go more to it. Just to say that federated identity is not very much deployed. Okay, there are few countries, Scandinavia and Belgium, where you do find IDPs, but for example, in France, it's not in the short-term plans of banks. And so we've seen what's going to happen. Okay, redirection decoupled. That's what's going to happen as of September of next year. But this is causing some debates. Scott mentioned it briefly. This notion of obstacles, so that's in the RTS. So the European Commission, that had the final say on the text of the RTS, introduced a kind of last-minute change with this notion of obstacles. The customer journey should not be obstacles in the customer journey. And it's pointing towards redirection. Okay, which is why the EBA published an opinion paper that in particular said, well, hey, redirection is not necessarily an obstacle. It could be if it's poorly implemented, but it doesn't have to be that way, right? Okay, which is right, actually. And the EBA actually stressed in their opinion paper the importance of implementation, whatever the model. If implementation is poor, it can be an obstacle, but it's not redirection per se, for sure. The Euro Retail Payment Board also published an opinion document in which they say, again, that the authentication models should not constitute obstacles to the provision of good payment initiation services. From the fintech perspective, it depends to whom you talk, because some fintechs are okay with redirection, and some fintechs are totally against redirection. Okay, and hence all the debates that have happened among stakeholders in Europe. And so this naturally leads to the introduction of two other models, and in particular the Berlin Group, which is the major API specification body. They're introducing two models to cope with this situation. One is called the embedded model, and the other one is called the delegated model. And so these are certainly not going to happen in September of next year. We'll see why. There's an impact on the open APIs, but they are interesting from a customer journey perspective. This is the embedded model. So the embedded model, the user journey is entirely on the TPP interface at all times. You never leave the TPP interface, and you are authenticated as part of that journey. And it can be on one screen only, or it can be on two screens, for example, with the example of payment initiation, where you have the screen of your PC, but you also have the screen of your mobile phone. But at any rate, you're on the TPP interface. The embedded model is defined as you're on the TPP interface, but you're nevertheless authenticated by the bank. That's the important part. You're on the TPP interface, but you're authenticated by the bank. So how can you do that? One way of doing that is using OTPs. Actually, when you look in detail at the Berlin Group specifications, this is kind of hinted is the way of implementing the embedded model. And so the idea is you're on your TPP interface, and you never leave that, but still you're going to have an OTP generated on a separate device, which is a bank device, so it's either generated on the device or received from the bank. And you're going to enter manually this OTP in the user interface. And by the way, that's just one factor of authentication, the possession of the device. And so you're still going to enter a password, which I don't represent here, but you're going to enter a password on the TPP interface. And you're going to push all that, or the TPP is going to send all that to the bank to verify and authenticate. And so this so it's relatively simple to implement, which is why it's specified already, actually. But it does create these two problems. It's not in line with customer education. Banks educate their customers never to enter their credentials in other parties' interfaces. Never. Your password, you use it with your bank. You never provide your password to anybody else. Of course, you all know that, right? But this implementation of the embedded model is exactly that. You're entering your password and your OTP in a third-party interface. It's against what the bank tells you all the time. Okay? How different is it from phishing? Okay, and you know, a person that's not familiar with all this stuff, what difference are they going to make with a genuine TPP screen and actually a phishing screen from a hacker? Right? The difference is it's a very thin line between the two. Okay? And so a lot of banks are actually not at all in line with this approach. Okay? So we'll see if it happens. Another way of implementing the embedded model is by using bank keys provisioned in the device with which you're going to authenticate. I'll give you a good example of this way of implementing the embedded model because it already exists. It's Apple Pay. When you pay with Apple Pay, you use the TPP interface of Apple. And actually, you're never redirected to the bank. You authenticate within Apple Pay, right? How does it work? Your phone is provisioned with bank keys. And when you pay with Apple Pay, you put your fingerprint or you take a selfie, and behind the scenes, the phone generates a cryptogram which is verified by the bank or by their proxy, Visa, Mastercard, but by the banking institution. It's an embedded model. It already exists, right? So this is definitely one way of implementing a model not to pay by card, but to pay by accessing your account. It is possible. Okay, EMV, to some extent, supports this model. Okay. FIDO supports this model as well, FIDO authentication. The idea is you generate or provision bank keys in the device, and then when you pay, you stay in the TPP interface, you take a selfie or enter a password that it belongs to the TPP in this case. But anyway, you authenticate, and behind the scenes, a cryptogram is generated by the bank keys and verified by the bank, which is the definition of the embedded model. And so this is an interesting model that has its own challenges, because to get the keys in the device, you need to enroll. Okay, so there is an enrollment phase for this model to work, okay, which can be seen both by banks or TPPs as a problem. But it exists, and it exists, again, Apple Pay is a good example of that. The second model, which is also disruptive and not yet implemented, is the delegated model. The delegated model, it's also a customer journey entirely in the user interface of the TPP, but this time the authentication is done by the TPP itself, not by the bank. So to some extent it's delegated to the TPP. Okay. There are a number of questions behind the delegated model. For example, okay, I'm the bank, okay, this TPP or merchant, whatever, is going to authenticate the user, and now I'm going to have to open access to the account. But how do I know that this third party did it properly? How do I know? How does the TPP convey to the bank that the authentication was done properly according to the security policies of this bank. So there needs to be a way to convey this trust. What happens in case of fraud? Who's liable? Okay. Under PSD2, the bank is liable if there is fraud, but now the bank's not authenticating anymore. It's the TPPs. So what happens? And so typically, you could foresee that the introduction of a delegated model is going to require bilateral agreements between TPP and bank, which is going to be difficult to scale. Okay. And so what's interesting is that there are actually a few initiatives that are looking at this model. Okay. Card schemes are looking at this model. Enrico and FIDO are working together, actually, to define a model based on 3D secure. Okay. The idea is that if the merchant authenticates the user using FIDO, then through 3D secure messages, you push information to the bank that this was done properly and according to the rules and the bank policies. Okay. And so the bank can then include this in their risk assessment and not step up. So delegate the authentication to the merchant. Okay. So all this is being worked upon. The Berlin group is looking at the delegated model as well. Okay. So there is an impact of these two new models on the open APIs. Before redirection decouples, very simple, there's no impact on the open APIs. You don't have to introduce anything. But with these two models, you do. In the embedded model, you need to manage this authentication handshake. Now the TPP has to interact through the open APIs with the bank because the bank authenticates from the TPP interface. So, for example, Apple Pay, again, as an example, you have a handshake with the bank. Okay? Apple communicates, I'm not going to go into the details, but in the end, there's information on the authentication which is passed to the bank for verification. Okay? And so you have this authentication handshake that needs to be managed through the open APIs. In the delegated model, it's different. The TPP authenticates, but it needs to pass on information to the bank that it was done properly according to the bank policies and so on and so forth. Okay? That can be done through 3D secure messages if it's card-based payments. If it's access to the account, it has to be done through the open APIs. Okay? And so there is an impact. I'll just finish with, because you've probably heard about the API evaluation group. I don't know if you have, but so DG FISMA, so the European Commission, created an evaluation group to look at all the various API initiatives and see if they were compliant with the PSD2, with the RTS actually, and also to try and harmonize. Okay. And so there were representatives in this evaluation groups of banks, of fintechs, of all the interested parties, so consumers, retailers, and so on. And so they debated a lot, actually. It's still not finished, actually. So there were a lot of debates, in particular on the authentication models. You can see the 38 recommendations that they published. So you have the link here. It's I don't know if the slides will be made available, but you can search on the internet. Okay, so you can find the recommendations published by the API evaluation group. In the recommendations, you do see an implementation of all the 4 different models that I described today.
Thank you very much, Alan. I think we might have time for one short question. Over here.
I'm not sure I need it, so I just, you talked about the use of biometrics and how FIDO and the use of biometrics should have in one step authentication, as you call it, and still need the strong customer authentication requirements. So what wasn't clear to me is you have the biometric, which is the inherence-based authentication. What's the second authentication? Because you alluded to possession or some sort of possession.
Yes.
Because of the use of the cryptogram, but how would you tie the possession of the device that was used with the user, especially because as you know, possession needs to be fresh.
Exactly.
Requirement for freshness.
Yes.
How does that work? How does the possession
So with FIDO, there are again 2 standards that implement this, FIDO and EMVCo. With FIDO, the device that you have contains keys that are generated with FIDO. The keys are generated within the device and pushed to the bank. is public key cryptography. And so, but the fact is that there are keys in the device. And so when you do your fingerprint verification, for example, if that succeeds, then the server will send a message to that device, and the device will encrypt that message and push a response back. And so clearly this is fresh because it happens every time. Okay, so it's renewed every time. And so this is the way to prove that you have the right device. Cryptogram verification proves that you have a device with the keys belonging to that bank. With EMVCo, EMV is based on symmetric keys, and so you have to provision the keys in the device. But otherwise, it's the same principle. You generate a new cryptogram every time you pay.
And the generation of the cryptogram assures that the legitimate user is still in control of the device because it's a challenge response protocol.
Yes, and it happens silently. That's why it's a one-step authentication from the user perspective, because the user only sees a request to put the fingerprint or take a selfie. That's all. This challenge response mechanism is totally hidden to the user. They don't see that at all.
Okay, great. Thank you very much, Alain. We're going to move on now swiftly to another presentation by Fernand Collet from Mastercard.
Good morning, everybody. So actually, I'm supposed to finish in 5 minutes, right? That's going to be a challenge. Anyway, I think I will try to spend 15, 20 minutes to go through what Mastercard is doing in terms of compliance to PSD2 requirements and what are the actual impacts for all stakeholders on the authentication value chain. So acquirers, issuers, access control servers, 3D servers, as well as merchants, all right? So we are going through that education process now since a few months, and I wanted to give you today a view on where we stand and what are the next steps. So what are the KPIs we are currently looking at? Well, basically 3 KPIs that are very important to Mastercard in security solutions, but as well in the overall digital environment. The first one is one of the key challenges we have is try to reduce as much as possible the abandonment rate when we are talking about CNP types of transactions, right? So here, today, I will essentially be talking about CNP environment, so e-commerce type of transactions, and what will be the impacts for all our stakeholders. So the first one, the level of abandonment rate is about 20% in the Europe region. So that's one of the biggest challenges we have. The second one, when we are actually comparing the approval rates during the payment flow, we see that there is a big difference between the physical environment and the virtual environment, right? So here, typically in a physical environment with typical POS and ATM environments, we have about 97% of approval rates for financial transactions, while when we're moving to CNP, we are losing actually more than 10 points. The average approval rate for e-commerce transactions being 86%. So big gap there that we are trying to sort out. The third one, obviously, is linked to the levels of fraud that we are experiencing when we compare the physical environment and the virtual environment. The level of fraud is tenfold, 10 times more than the fraud that we are experiencing in a typical physical environment, right? So 3 main challenges that we are trying somehow to solve through different things. So here, what is the aim of Mastercard is 3 things. The first one, of course, is to reduce friction, reduce as much as possible the abandonment rates related to e-commerce transactions. And there, we are mentioning probably in terms of KPIs less than 10%. The second KPI, reduce declines, so improve the approval rates, probably to a level higher than 95%. So big challenge. And the last one, reduce fraud as well to a level down or less than 10 basis points. The average we have now in Europe is about, well, between 20 and 25 basis points. So what we are doing is really try to develop a digital security roadmap at Mastercard that will as well leverage all the PSD2 SCA requirements that we have. So in front of you, you have four big actions that we have at Mastercard. The first one is really, as much as possible, leverage the SCA exemptions, so strong customer authentication exemptions that are offered by the PSD2 RTS. Second one is launch and develop biometric authentication. Third one is, at the end of the day, even if exemptions are leveraged by acquirers, the issuer will always have the final say to say, well, I'm accepting the acquirer exemption, or I decide to step up or go through a challenge transaction. The fourth one is critical as well. We know that by leveraging the EMV 3DS or 3DS2 specifications, there will be much more information that will be channeled or sent by the merchants to the issuers. So there is something we can do about that. And Mastercard will derive risk scores based on the authentication data that will be provided in both the authentication messages or the authentication flow, but as well the authorization flow for payment. All right, so let's go through each of these four key actions. The first one is really maximize as much as possible the SCA exemptions. As you can see here, on the left-hand side, you have the list of SCA exemptions that are available to acquirers and issuers. The ones with the background in red are the acquirer exemptions. And all of them, so the 5 that you have in front of you on the left-hand side, are those that can be leveraged by both acquirers and issuers. All right, so what we are anticipating is that probably in the future, when EMV 3DS or 3DS2 will be launched and used by all stakeholders, we can anticipate that probably 100% of transactions will go through the authentication flow, and probably 20% of these transactions will be abandoned for the reasons that I was providing before. This is the case where no exemptions will be leveraged, but then, of course, we are really pushing all stakeholders to leverage as much as possible the SCA exemptions, just to reduce friction and improve the approval rates as well. So we anticipate that with the exemptions, there will be about 60% of transactions that will be exempted. So the other 40% will need to go through SCA exemption, so SCA, full strong customer authentication, again with about here, well, 20% of the 40%, so 8% of abandonment rates, all right? So that's the first action, very, very critical. We are providing those messages to all the stakeholders on the authentication value chain. Quite difficult, but at least we will try to monitor as much as possible what is happening on that front. The second one, just to continue on the exemption, so whitelisting has been mentioned by Scott a little bit earlier today, but this is probably one of the exemptions that will be leveraged by issuers. Again, these are exemptions that can be leveraged by issuers only, and issuers will be capable of offering that capability for cardholders to whitelist a list of merchants, all right? This can be done at the time of the checkout, or can be done as well after the fact, leveraging the online banking application of the issuers, or the mobile applications of the access control servers. So we've gone through a survey a few months ago, and this survey has shown that overall end consumers will be very interested to leverage whitelisting, especially if that service is offered by the bank itself. So that's the third case on the right-hand side, whitelisting via mobile banking. 75% of the end consumers have mentioned that they wanted to leverage as much as possible this option. The second big action is the support of biometric authentication. So we at Mastercard have leveraged really the PSD2 RTS SCA requirements to push as much as possible biometry or biometric authentication. And biometric authentication is now part of the Mastercard digital security roadmap, where we are actually mandating by April 2019, if not September 2019, depending on the country in the EEA region, that biometry is offered by issuers in those countries, right? So as you can see here, in terms of abandonment rate, SMS OTP is about 12%, while we are going down to 5% for biometry. So that's something we need to consider. Of course, this authentication method will leverage as much as possible the mobile banking app available on smartphones. And of course, in terms of fallback, we are still very much interested in OTP via SMS. So those two authentication methods, so biometry and SMS OTP, are actually two of the preferred or privileged authentication methods that we have at Mastercard, and that are actually documented in the Mastercard ID check program specifications. So that was the second action, very important. The third one is indeed, when we are talking about the Mastercard ID check program or PSD2 SCA requirements, we need to leverage an underlying protocol, and we will be using obviously EMV 3DS or 3DS2, 3DS 2.1 specifications. We are still waiting the version 2.2 specifications that will be probably available, promised in November, probably available in January, but we are still waiting the EMV code to get back to us on this one. But here, of course, EMV 3DS will be leveraged to go through the support of Mastercard ID check as well as PSD2 SCA requirements. So the big difference between 3DS1 and 3DS2 is that there will be much more information that will be transported from the merchant to the issuer. So there is something that we need to do about that. So indeed, all that information will be sent to the issuer, and at the end of the day, the issuer will have as well much more information to take a better decision on the overall payment transaction. So here, EMV 3DS authentication, we are expecting that the approval rate linked to those transactions will be equal or above 95%. If we are currently looking at the current approval rates that we have for 3DS1 with CQ code, we have right now 93%. But then at the end of the day, it could be, there will be some cases as well where some of the merchants will not leverage EMV 3DS and will go straight to authorization without leveraging authentication. In those cases, that's the case you have on the left-hand side, no authentication. We can expect that the approval rate linked to those types of transactions will be about 83%. Last but not least, the fourth action here, very important, is that all that data that will actually be sent by the e-merchants to issuers will be leveraged by Mastercard. So Mastercard will take a look at the authentication data, will derive risk scores that will be actually included in the financial transaction sent to the issuers. All right, so that's really critical, very important to push as much as possible the usage of EMV 3DS. All right, so a few challenges that I wanted to share with you, because this is coming from a set of surveys that we have been performing at Mastercard, and I believe that the results of those surveys are quite interesting. The first one is around 20% of large issuers informed us that no DS transactions will be declined. All right, so the vast majority of issuers said if EMV3DS is not used and the authentication process is not leveraged, we will systematically decline. All right, so what we are actually pushing here is that the merchants, if EMV3DS is not supported by the issuers, should actually fall back to 3DS1. All right, so merchants will test first in EMV3DS or 3DS2. If the issuer does not support 3DS2, then a fallback to 3DS1 should be preferred. The next one, and that's very scary. We have received the feedback from a vast majority of merchants that about 75% of merchants have never heard about PSD2, never heard about SCA requirements. That's a major problem. We at Mastercard are actually managing the top 50 to 100 super big merchants. But what about the other ones? If we have 800,000 merchants in Europe, those need to be handled by the merchants or PSPs, and we are not seeing right now those messages being sent to those merchants. So that's really critical. The third one is we know that we will have about 20% of all e-commerce transactions that will be off-session transactions. What does it mean? This means that the end consumer or the cardholder is not in front of his device to go through the authentication process. So that's a major issue. So here, in terms of the recommendations, of course, leverage as much as possible the SCA exemptions that are offered within the scope of the PSD2 RTS, but as well using EMV3DS 2.2 in the future, possibly leverage decoupled authentication as explained in the previous discussion. Next one is SMS OTP. We've talked about that several times this morning. We are at Mastercard still questioning the EBA. So we have a set of initially 26 questions now raised to 29 questions that we have raised to the EBA, and we are still expecting to receive answers. And one of them is related to SMS OTP. Should it be used for strong customer authentication with card data, with whatever other types of authentication methods? So this is one of the pending questions we have to the EBA. Next point is we know that a number of issuers will be late in their migrations. So the effective date of the PSD2 RTS is the 14th of September 2019. We know that a number of issuers will be late in their migrations. So in that case, what we are promoting is the fact that merchants, if the issuer does not support EMV3DS or 3DS2, should actually fall back to 3DS1 in order to complete the transaction. And the last point, up to 75% of authentications fail because of cardholders not being enrolled. So this is quite important at our side as well. We are trying to push as much as possible all issuers to pre-enroll or enroll upfront all their customers, all their cardholders, sorry, to actually start leveraging the Mastercard ID check program. We know in the old legacy system, the 3DS1 system, that we still have a number of issues related to that. So we want to sort this out. And we have in the Mastercard security roadmap a specific point linked to auto-enrollment or enrollment that is actually mandated by April 2019. All right, so number of tasks to be done by all stakeholders on the acquiring side, on the issuing side, for access control server, 3D servers, and merchants. I will not go through that with you. What I wanted to say here, and it's quite important, is that we are right now going through this education exercise with all stakeholders. It takes time. We organize on a monthly basis webinars and workshops with all these stakeholders. So if you want to leverage those webinars, for example, do not hesitate to share with me your business card, and you will be invited to those webinars that are actually free of charge. But most importantly, I think that this slide here is quite important. So Mastercard and a number or a selection of stakeholders have gone through a kind of pilot phase that we call the early adopter program that has now been finalized a few weeks ago. The next step in preparation, and that's one of the key messages that we have at Mastercard, is that EMV 3DS has to be supported. So the deadline there is April 2019. As soon as EMV 3DS, so the underlying platform used to actually implement the Mastercard ID check program, as well as PSD2 SCA requirements, has to be implemented. And when this is done, then it's really up to the acquirers and issuers to define their authentication policy. So define what type of exemption will be used by acquirers, by issuers, and how the overall authentication flow will be managed. And then, of course, the September deadline will come up very quickly. The good news is that a lot of issuers, at least, have confirmed that they will be ready in September 2019, which is good. So we need to live with that and hope that all stakeholders will be ready by then. All right, so there is a sense of urgency. So we are trying right now to push all stakeholders to be ready on time. Not easy at all, especially when some of the questions we still have have not been clarified or have not been answered by either the EBA or the EMVCO. But at the end of the day, I think that all stakeholders will benefit from this journey we are currently going through. And with that, I would like to open the session to a few questions, if you have some. Just
thank you very much.
A small comment here. In order to support all that, we have published at Mastercard the authentication guidelines for the Europe region. These are available. They can be shared with you free of charge. So if you are interested to receive those, do not hesitate to come to me, and I will share that without problem.
Thank you, Fernand. So we have time for a few very short questions, and please do speak into the microphone so we can capture the question on the audio.
Good morning. With all the issues that Scott mentioned, how can you move ahead with the PSD2?
Yes, so I was mentioning that we have a number of issues, and we are working with Scott and other people. But indeed, as I was mentioning, we still have a number of questions. What we are trying as much as possible is try to mitigate as much as possible all the risks we have. So for example, we know that EMV 3DS 2.2 will be very late, right? Communication of the specs in January, availability of the test platform probably in Q2 next year, in production Q3 of next year. The EMV specifications will support acquirer exemption. Right now, we know that it cannot be supported with the EMV 3DS 2.1 specifications. So what we are doing is trying to amend the specs to support that. So indeed, still a lot of questions around that, but we are trying as much as possible to bring answers.
One more over here.
Good morning. Thank you for your presentation. One question regarding EMV 3DS and management of personal data. You mentioned that 10 times more data will be available for the issuer. You mentioned that the merchant will have to adopt his contract for collecting personal data, because many of this data are personal. What's your point on this issue? Who's the data controller? Who's the processor? Who's liable in case of personal data breach?
Yeah, so this is one of the key points we have, and the GDPR team at Mastercard has been working on that. So what will happen is that when the acquirers and the merchants will be set up on EMV 3DS 2.0, there will be a number, well, a set of terms and conditions that will have to be signed by the merchants, considering all the things related to the GDPR. So this has been taken into account and is now part of the tool that all acquirers and issuers will leverage to do the setup of their system in EMV 3DS 2.0.
Okay, great. Thank you very much, Fernand. We're now going to move on swiftly to the next presentation by Thierry Spagnard. Thierry?
Well, good morning to all of you. My presentation will be a lot less technical than the previous ones, and it will try and deal with ethics, morals, democracy, values, and all these kind of things that technical people are not always willing to get into. First, in terms of a quick introduction, my name is Thierry Spagnard. I'm a consultant at Intelling. Intelling proposes services for the secure transactions industry. So we define the secure transactions industry more or less as the people involved in TRUSTECH trade show and conference. What we do is we provide services in terms of market intelligence, market research, marketing, strategy, and communication for players in this industry. We also publish a blog, which is called Smart Insights blog, that you can find at the URL shown on this slide. This presentation will revolve around GDPR and PSD2, and rather than getting into detail about what is in these regulations, we'll try to find out where they come from and what are the objectives of the lawmakers when drafting those regulations. Interestingly, there are some opposition to both these regulations, and what's interesting is these regulations are actually a means of power for Europe to go further beyond its limits and to impose its views and its values on the world. GDPR didn't start in 2018, actually. It did start in 18, but it has its roots further away in history. It starts from, you may make it start from 1789, or make it start from 1948 with the Universal Declaration of Human Rights. And this is where privacy gets embedded into law, stating that every individual has right to his privacy, his private and family life, home, and correspondence. And this is where the secret of correspondence gets into regulation. Fast forward, let's go to 1980 with OECD recommendations that are established the first principle about personal data, and especially the principles that we find later on in GDPR. Users, call them citizen or call them consumers. At the end of the day, it's each individual. Must know about when the data is collected, how it will be used, being able to restrict transfer and have access to the data. In 81, the EU set up the Council of Europe, which is a much larger entity, including a large part of Central and Eastern Europe. Established the Convention for the Protection of Individuals with regard to automatic processing of personal data. So we started to get concerned about automated processing of data almost 40 years ago. And the Maastricht Treaty had provisions about human dignity and respect for human rights, but everything got into detail in the first Data Protection Directive, which was coming from the EU. That was the first occurrence of defining what personal data was actually all about. And personal data, as they define it, was anything that allows to get to the identity of a person, whether it's with a single identifier or whether it is with a set of data that allows to get to the identity of the person. And the principle is at first negative. Data should not be processed, except if it is specially authorized to be processed under a list of rules that allow this processing. And also in 95 was the creation of the supervisory authority in each country, in each EU member state, so that's the ICO in the UK, that's the CNIL in France, and all other supervisory authorities. In 2000 came the Charter of Fundamental Rights, and in 2016, the Privacy Shield. The Privacy Shield was an agreement between EU and US, but the interesting thing with the Privacy Shield is that it was to be enforced at company level and not at government level. So the Privacy Shield allows each party to investigate how the other party is dealing with data before allowing to process data by the other party. So the first regulation came from cross-border use of personal data rather than for domestic or meta-level domestic in case of EU use of data. And the Privacy Shield puts into law something that has been known to all, that in the US, the protection from the First Amendment is given to US citizens, but not to foreign citizens, and not to the data belonging to foreign citizens. In 2018 came GDPR enforcement. We all know the principles of GDPR in this room. Lawfulness, purpose limitation, data minimization. This relates to privacy by design. If you don't collect data, you're sure you're not going to unfairly process it. Accuracy of data, now it can be controlled. Limitation of storage in terms of time, in terms of number of occurrence, in terms of dissemination of data. How to ensure the data integrity is kept, and how to ensure confidentiality. And this has led to raising a few issues. We've talked this morning earlier about the issues raised by the PSD2 enforcement, issues raised by GDPR. There are a few technical challenges. One, there's a need to ensure that the data is erased. It is quite difficult when data about a given person or a given entity is spread across different databases or different databases belonging to multiple entities, even in multiple countries or in multiple regions across the world. Also, anonymization is not yet an exact science. You may try to anonymize data, but if you've got lots of data about a person out of a limited set of persons, you can demonstrate that this data is not actually anonymous. And finally, the GDPR mandates that a breach is to be notified within 72 hours after its discovery, which is quite difficult because the issue related to is how to effectively identify which data has been breached, what are the extent of the damages, and so on before informing the regulatory authority. This has led to building up a body of research which is called data ethics. There has been works made by the Oxford Internet Institute that set up a set of rules and a set of principles about data management that led to what is actually enforced into PSD2, into the GDPR and other frameworks. And of course, GDPR has been criticized because of its cost. I found easily evaluations of the cost of GDPR by the Americans, who complained because it's decided by the Europeans, obviously, that evaluated to $7.8 billion for the Fortune 500 companies, which is still quite a lot. For the UK, the evaluation say it's 800 million, and it's quite difficult to get an estimate at the European Union level. An estimate I found was 5.6 billion euros, whereas it's quite difficult to evaluate the actual cost for all small entities that have to comply with GDPR. And the main driver to comply with GDPR is, unfortunately, not ethics, but the risk of being fined. The risk of being fined at a level of % of sales or 20 million euros. As far as I know, none of these fines have been enforced yet. What's interesting is that the exchange of data across borders makes that those European regulations are actually extended beyond Europe. The US is setting up new regulations. Most of them are state levels. There are works that are undertaken in New York State. The most advanced one is California with CCPA, the California Consumer Privacy Act, which in a way is wider than GDPR because it includes IoT and the data dealt with objects, collected by objects, managed by objects, exchanged by objects. Unlike GDPR that requires a voluntary opt-in, CCPA accepts that the opt-in can be involuntary by the user and undecided by the user. And CCPA sets up a minimal level in terms of business size, in terms of sales, or in terms of quantity of data managed to apply, whereas GDPR is universal. Many other countries are actually either drafting new rules or amending their old rules in order to comply with GDPR, because they need to exchange data with entities within the EU, so they have to adapt their own regulations. So just a few examples I've taken here. Argentina is currently drafting a new law. Australia has decided on a new privacy amendment, which is more or less relating to GDPR. Canada is proposing amendments to its PPEDA Act to harmonize with GDPR, with the concern that Canada is also part of NAFTA, and they have to comply with US rules at the same time as with GDPR. Even China is setting up new rules about the protection of personal information, and in some cases, these rules are even more stringent than GDPR in terms of protection of personal data. Now, a few words about PSD2. Again, PSD2 did not start right now. It's here of the PSD. The objective of the PSD was to increase pan-European competition on banking and create new entities that are the PSPs and the electronic money institutions. At the same time, the PSD as developed by the European Commission is positioned as providing better consumer protection. There has been updates later on that led to the PSD2. The PSD2 defines the AISP, the Account Information Service Provider, and the PISP, the Payment Initiation Service Provider, and authentication rules. We've been talking extensively this morning about how these authentication rules protect the consumer, but at the same time may represent hindrances to running transactions smoothly. Interestingly, the one who have been complaining about the PSD2 are the traditional banks, unsurprisingly, who complain that as they have to open their data and to develop and maintain APIs, it's created cost, and of course they complained that this meant losing some customer control or customer interface, and this was leading to more digitalization. The values that are actually behind PSD2 and that were in the minds of the European lawmakers were to give more power to third parties and to merchants, and in a way reduce the power of traditional financial institutions. The way it was presented was to give more power to the consumer to choose who was the first level interface to the payment system. But actually, there is still an issue of confidence. Consumers are still a lot more confident in traditional financial institutions than in new entrants and fintech. So this will probably evolve over time. And facilitate payments integration by the emergence of European naval players, but probably having a single market for payments, which also opens this market to non-European new entrants. I'm close to finishing. Don't panic. So PSD2 also has an international reach with countries in other regions adapting their regulations in the same way as PSD2. Just to reach a conclusion, well, GDPR and PSD2 are participating in what's called the body of soft law. An entity or a world region can get some influence on the rest of the world. And by GDPR and PSD2, the EU is setting up its influence in the other regions of the world.
Okay, great, thank you, Thierry. We probably have some moments for a short question, for Thierry. Any questions? Okay, well, thank you very much, Thierry. From Benoit Gouet, CDLK Services. Thank you.
Hello, everybody. My name is Benoit Gouet. I'm CEO of CDLK Services, a company, a Fintech I co-founded 5 years ago. And basically what we are doing is transforming payment data into new banking services. So we call a fintech enabler, helping banks rather than trying to disrupt them. So basically the subject I would like to share with you today is about is a PSD2 a game changer in terms of payment data workability. And so it's not about the GDPR, it's not about all the change the PSD will offer to a new peer or historical player. It's just about being focused on one key element, is what can we do with payment data today. It's going to be different tomorrow, end of March, because of the PSD2. And why it's important is because we keep hearing over and over in a conference, in a press magazine, in newspaper, the fact that payment data is a new oil. This is the El Dorado. This is a big rush with the open data, and is going to be to transform the entire financial industry. So I have two statements coming in my mind on this kind of subject. Is one, evil is in details, so we have to look closer what's going to really change. And also the fact that garbage in, garbage out. And frankly, I heard so many times people having some fantasy about how to exploit those data, and again, putting the GDPR aside, which is, of course, a tight frame. We have to be honest with what's going to be new or not. So next is just to say, okay, end of March, what's going to be the big change? Until now, the new player, the PFM, was able to scrap through what we call the web scrapping to collect the payment data on the bank statement. So what's going to be after end of March on just the current account, as you know, is going to be through bank APIs. So again, same data are going to be collected in a different technical way. The change, of course, is about the customer journey, because instead of giving the login password, the customer is going to just grant the third player, the third parties to access to his data. And good news, hopefully we will have some regulation about those fintech. And of course, again, this is not the subject of today. Is going to probably ease a lot the adoption of the PFM, because I will be no more in the position to give my login and my password to any third parties. So no doubt that it's going to change a bit. But then, regarding the business model around the payment information value added services, is PSD a game changer? I would say not really, because again, we will access exactly to the same data. And when we are saying the same data, is at the level of the bank account. So it's a date, it's a supposed description of the merchant, and the amount. So basically, if I want to develop, if I am a fintech, if I have a million and million of payment data I want to leverage to make new services, to monetize them, I want to be sure that I can recognize what kind of merchants are on the payment data. And today, there is just one wording in field, which is a description of the bank statement. So basically, this is where we can see that the bank, in fact, for once, there is in an interesting position. Why? Because if you look more specifically what's going on the payment data side, everybody, and especially the PSD2 is dedicated to, is on the bank statement. If you look back and you see the payment data at the sources when they are entering in the bank, you have much more information. You have much more information to data crunch, and then to be in a position to recognize correctly the merchant. And it has got to do with a good categorization at the VFM. You have got to do with the right identification, and of course, the right geolocalization. Just to give you an idea, my company is running some program in a card-linked offer. And on a practical way, when you are dealing with a merchant chain, they are saying, okay, I'm okay to run a cashback campaign in March 2019 for 1 month. I give you the list of the merchants participating into the program, but just this list is not the full chain. If you have just the information on the bank statement, you are totally unable to split those participating into the program versus the other. So what we can do, or what the bank can do, is definitely putting in place a real payment data management platform in order to make the monitoring, the auditing of the transaction accurate, because behind this type of model, you have to charge the merchant for the cashback, and the merchant will require some auditable figures. So my point is really to say that PSD2 on this specific subject won't be a game changer. Second point is the bank are still in the situation to leverage this unique asset, which is having upfront the data, the payment data as a raw payment data entering in the bank, and they have to make the effort to get an access at this level, because, of course, as you know, because of the legacy, because of the IT cost, and so on and so forth, they are still a bit reluctant to see in other place where are the payment data, the workable one, rather than just continuing to collect where the data is more accessible, which is on the bank statement. But they are playing at the same level of the third parties, the PFM, standalone or not. And at the end of the day, behind there all the question of the value for the customer, because today there are still a big issue when you are reading your bank statement. you are still unable to recognize some merchant. And you can get some budget pie that the PFM functionality offer to you. But my pie is at 75% unnamed. It gives you the value of the PFM today just because we didn't make any effort to extract the right data. And there is another subject I won't cover you because we don't have the time, is the fact that when you get the raw data, which is a number of data I just put on the slide here, there is a lot of data crunching on it. Because most of the time, when I said garbage in, garbage out, at the time the merchant is signing the contract for the POS, he could put the legal entity. He can put a lot of information in the field he has to complete. But at the end, there is no obligation that these fields are correctly completed. So there is, of course, a challenge for banks and for people working on this subject, like CDLK, is really to run some data cleansing program to make it upfront workable. And then for the cartling offer, for business insight for the merchant, for any new banking services, it will be then affordable. So this is what I would like to share with you. If you have any question, feel free.
Thank you very much. Yeah, time for one quick question. Yep.
I would like to know what would motivate banks to give to TPP, for example, more rich informations rather than this simple one that you presented.
Oh, you're right. This is the first objection we can get. Is what I would prefer to keep that poor, rather than enriching them, and to share that with everybody. First, you have to look at the aggregation level, meaning that there is always for the third parties or the PFM the difficulty to manage some information being enriched by the bank, who will adopt this kind of solution, and the other. So the kind of, let's say, consistency in terms of delivery. But at the end, I would say, first of all, continuing that, having 2 calls per day by counselor in the retail network about customer claiming that they don't recognize their merchant transaction. It creates a lot of cost in terms of inbound calls, and it creates a lot of problem in terms of fraud not recognized or fraud declared but not proven then because of the poor quality of the data description. So at the end of the day, you have to see that in the holistic way, and all the banks should go there as soon as possible before having the GAFA on their back, making this kind of exercise much quicker than them.
Okay, great. Well, thank you very much, Benoit. Session, we've got one presentation remaining from Luis Rodriguez from Mobi Forum. Thank you.
Whoa, nice bright lights. You guys need to help me today. Every time I get one of these, I get the urge to sing. So I may ruin your lovely sunny day outside. So I'm here today representing Mobi Forum. Mobi Forum is an organization that it's a global organization that tries to get a community going to get leadership and thought leadership in the terms of the financial industry. Here we have some of the members, some of the main banks in the industry that are shaping the way the financial services are going, but also some of the companies that are technology companies that are also shaping that financial service industry, which one of them you heard today. The way the the Mobi Forum is organized is as a community. They try to get conversations going, looking at subjects that are relevant and interesting to the industry in the time span of 1 to 5 years. So when a subject like open banking is hot, and people are start to have doubts about it, they start looking at those, and when they become mainstream, they stop. Because obviously everybody has interiorized all those processes. The way the community is organized is through expert groups, which basically allows us to focus the conversation, get collaboration going, and especially produce a lot of output, that can be shared back to the community and back to the industry, because that's one of the focus of the organization, to create thought processes and thought leadership and to share it globally. Some of those groups is the Open Banking Expert Group. That's the reason I'm here, again with one of those mics in my hand. And I'm here today to talk about open banking, which is one of my favorite subjects. And you can imagine how happy my wife is when at dinner table I start talking about, oh, they changed the RTS of PSD2 for SCA again tonight. And it's like, we have a laugh every night. But actually open banking is very interesting. The reason it's very interesting is because, in my opinion, it's a philosophy. We've been talking about today, or hear about today, a lot of things, in terms of technicalities, regulations, how things interact, the rights of customers, etc. But the way we see it is that it's really a transformational change. You are going to have a lot of competition, a lot of shift in the market, and you need to think about open banking beyond just regulation and think about who's going to affect your business. Because at the end of the day, and we heard this today, you're going to need the customer consent to do many things that are involved in these regulations. And for that, you're going to need to excite them to give you that consent. And we'll try to see how in a few slides later. The key thing is that in the expert group we looked at was that what roles would you be able to play, in this new environment that allows you to change the way you compete or to actually, let's say, defend or attack in this market. And we look at this in terms of two positions. One from the position of products and services, and one from the position of information services. And we drafted these roles in a quadrant. From the position of products and services, we define 3 roles. The bank as usual, a distributor and a producer. And we drafted in based on the axis of your services and the third-party services and your channels and third-party channels to position in this here. The bank as usual is obvious, right? Is that you keep with the status quo, you meet with the regulation, the PSD2 regulation, you provide APIs, and you stop there. You keep doing what you're doing now. We don't think that is a very sustainable position. I think that is not really a winning proposition for you to take. Carry on doing business as usual. But if you choose to do that, it needs to be a conscious decision. It cannot be just inertia as doing what you're doing and meeting with the regulation. The second role that is very interesting is the role of distributor. And we already seen some of the big banks like ING, Santander UK, others playing this role, right? It's basically where you just aggregate other products and services to keep control of the user experience. So the sample that you have there is the ING and Cabbage. So if you are not interested in cover a particular, let's say a short-term loan for a small business of 600 euros, 3,000 euros in a year, something like that, why lose the customer? Why relinquish that customer and let it go somewhere else and then for somebody else to gain that experience, that customer, and maybe that trust? So we think a possibility is for you to then aggregate these other services that you may not want to provide, but somebody else will. Somebody else in the market will. And you see there the business model. Potentially you can take a cut of that, like a reseller agreement. But what we see in the midterm is that you potentially, as a distributor, can leverage and create an ecosystem of partners that develop specific products for those areas that complement your offering. Okay, distributors is possibly, you think, something that will suit for banks that are really big, like ING, Santander, as I mentioned. But we also see in this in small neobanks like Sterling in the UK, where have born already with a platform mindset in mind, where they're already offering, products and services that complement their offering right away. The second role is a producer. And this is, where you will think, okay, how can I increment my channels? How can I actually leverage some of those fintechs that will be out there and actually use them to sell my products, to increase my reach? The example that you have here is a sample of the Nordics with Tink, and somebody mentioned this morning about mortgage comparators, right? So, again, there are fintechs that are capturing market share in terms of users, and where you can say, well, if you are, you have a mortgage with Bank A, I can offer a better mortgage with Bank B, and you're playing that role in that platform. You're selling your products to these third parties. Potentially, this role is perhaps more suitable for smaller banks, where they have less marketing capability, less brand awareness, less reach in their financial sector, and they can leverage these other platforms, that are out there that have that track to offer those services. We don't see the producer and the distributor role as exclusive. You could see both, right? You could be a distributor of some products and producer of some products. But you would see that we anticipate that the industry will position possibly, based on size and based on reach, in one role or the other. So this is from the point of view of products and services. From the point of view of information services, again, we see three main roles. Again, drafted in terms of the bank channels and the bank services, and the party channels and party services. And what we're talking here is about how can you leverage the data that you have or not. And there was a very interesting question from the previous presentation about why will a bank provide that data to a fintech? For money, right? Why not? That's one of the things that you need to think about when you're thinking about PSD2, is that how you're going to make money out of it. So again, we identify obviously the role of bank as usual. I'm not going to go there. You carry on what you're doing. And we identify two potential interesting roles: as an information provider, as an integrator. As an integrator, this is something that we have seen, especially in the UK, lots of, again, initiatives. And also in Spain, BBVA, La Caixa have already launched aggregation services, where as a consumer I can aggregate my accounts. Here you have the connecting money in HSBC, which is a separate branding. All the colors that you see in the pic are from all the other banks in the UK. So you can aggregate data. The idea is that you're going to integrate all those sources and being able to crunch that data, gather more additional information and crunch that data to provide perhaps additional services or additional information to other parties. And one thing I think is important is that you need to start thinking beyond banking data, okay? There are, when you think about your users and you think about gathering that intent and that consent and that interest, you need to provide additional information that is not just financial services. It may be other information available there, like for instance, accounting package information for small businesses, electricity bills, travel miles, I don't know, you name it, that are also relevant for the bank to actually understand your customer and provide additional services. So think beyond your own industry, think beyond of that point. The other role that is interesting is an information provider. And you will see there are lots of initiatives in the industry, especially in the Nordics. The example here is about BBVA, which are basically going beyond regulation and thinking, okay, I have, as the gentleman before me was saying, more data, and I can have more information. I can do KYC processes. I can leverage these services, and as well as meet the regulation, offer them to providers, to third-party providers. Offer them APIs in a model that is actually like premium, and you pay for what you get. And this is a very interesting trend because we are seeing lots of competition between banks to become the platform of choice for the good developers, right? It's that you want to attract good third parties to work with your APIs to provide good services, right? So you see a lot of, Nordea has launched also a development platform. Erste, all of the banks in Northern Europe especially, are creating these ecosystems of APIs to attract fintechs to develop services on top of these of their own APIs. And the extreme case will be act as a service, really. You know, like you have you know, already like RBS in the UK is using Sterling Bank as their core banking system. So Sterling is actually providing their core banking as a service to somebody else. Okay. So let me summarize the 3 takeaways, and I can let you go for coffee. First, a key question that you need to ask yourself, beyond regulation, beyond the technical difficulties, is that how are you going to make money out of this open banking process? Is key question. And that question, I think, will trigger all the transformations and all the change that needs to happen in your organizations. The second thing is that you really need to choose a role. I don't think you have the luxury of being a sitting duck. You know, that's quite a nice one from the Crocodile Hunt, I think it is. But you cannot really afford to be a sitting duck. You need to be proactively choose a strategy. You know, don't go with inertia and just meet the regulation, because it's a significant business model transformation. And that's the third takeaway. And open banking, that really is that. It's a business model transformation. You need to rethink how you're going to market, who are you partnering with, which services or not you are offering, which data or not you are offering to your third parties, etc., etc. And I think, in my opinion at least, one of the things that is relevant in this business model transformation is that you need to change the philosophy of the bank. You don't need to be good at everything. You can use somebody else's services, and that is a significant and difficult change for any organization nowadays. So to end, just to remind you, you know, open banking is coming. It's a global trend. You know, I'm a fan of Game of Thrones, and you cannot really wait on the sidelines. Thank you.
Thank you very much, Luis. Do we have any questions for Luis just before we close off? Yeah.
Well, good presentation, and I think like the others. I have a question. I mean, this is really triggered by banks, fintechs, distributors. Now, as you said, you need the formal consent from the consumer. So what value is it for the consumer? Are we going to see a yellow jacket movement because people don't want to share their information?
It's a key question, and I think that's the reason we, in Mobi and whenever I talk about open banking, I really think that you need to forget about gathering transactional data and more focus on the proposition, right? So if you think, for instance, a small business proposition and you think about a shop that needs a €3,000 loan, and you are able, by aggregating other people's services, to provide that loan in 24 hours, that's where the value is. So the next time when you ask him, if you give me your accounting packaging data, I will be able to give you even a bigger amount of loan, you know, with a better underwriting, he will do that. And when you then next say, and if you aggregate your other bank accounts, I will be able to provide you better services, better credit cards, then you gain the trust. And I think that's the key thing. You need to start thinking about first the value to the customer, and then gathering the data. At the moment, because of regulation, we are all thinking about opening APIs, you know, our mouths drooling about the amount of data we're gonna get. And we forget that first we need to provide use cases of value for then gain the trust and then gain the access. That's basically my line of thought, and my recommendation would be focus on a few use cases where you convince your users to, you're providing additional services of their value, and then gain the trust gradually for this consent for other data.
One question over here.
So you provided the perspective largely of a bank or an ASPSP in this review. I mean, largely consistent with the Mobi Forum membership. You didn't say anything about the API standardization initiatives that are currently happening. Any views on whether the bank should join any of them, or you know, go on and develop their own API, or you know, and therefore kind of propagate the existing model?
that's one of the things that the group is looking at the moment. We are looking at two parts. One is this one, say what is the best approach in terms of on development or kind of joining the the hubs, API hubs, let's call it, that are being created. So we are creating another kind of research on that area on the group, but we don't have an answer yet. Right. That's the reason we haven't presented it.
Thank you.
Okay, thank you. Does anybody have any closing comments or remarks just to finish off this session? I know the keynote speeches have started, so you're welcome to leave, but if anybody has any comments they'd like to make before we close, then otherwise, thank you very much for coming, and see you all next year.